Hello everyone, it's Friday, June 27. Today we're taking a closer look at the euro and British pound charts to assess potential market movements. The euro extended its bullish run during Thursday's European session, reaching a fresh one-month high, though failed to sustain gains above the 1.1700 level despite downward revised US GDP data. New data showed that the US economy shrank at a 0.5% annual pace from January through March. The previous first quarter GDP report estimated a 0.2% dip following a 2.4% expansion in the fourth quarter of 2024. While downbeat statistics waned on the greenback, that was not enough for the euro to stay firm above the 1.1700 mark. Currently, the common currency is trading below this level with the upside momentum fizzling out. Meanwhile, the pound's rally is still intact, signaling the gains could extend. However, much will depend on upcoming Bank of England and Federal Reserve policy signals. In the meantime, risky assets continue benefiting from broad dollar weakness. However, US President Donald Trump's latest unsubstantiated trade assertions, including an announced but unconfirmed agreement with China and references to an impending India impact prompted a modest correction in the dollar weakness. The claims lack official validation, with Beijing offering no confirmation of any deal. The US administration has only ratified a UK trade agreement to date, while EU negotiations appear to have stalled ahead of the July 9 deadline. This suggests that heightened volatility around Trump's statements may persist. Now, let's take a look at today's macroeconomic calendar. It includes data on consumer price in France and Spain. Allies will be on the core US PCE price index, the Federal Reserve's preferred inflation gauge. The annual indicator is expected to increase to 2.6% in May, up from 2.5% in April. On the monthly basis, core PCE inflation is forecast to rise 0.1% in May after edging up 0.1% in April. Higher than expected readings could bolster the dollar by reinforcing expectations of prolonged Fed policy restraint. Conversely, a significant downside surprise might strengthen arguments for potential rate cuts as early in this fall, particularly after a 0.5% economic contraction in the first quarter of this year. In addition, traders may take notice of U.S. personal income and spending data as well as the University of Michigan's consumer sentiment, inflation expectations, and current condition indices. What is more, Fed officials Lisa Cook and Beth Hammack are set to speak today. While their statements may provide additional policy insights, the core PCE inflation data remains the primary market mover expected to set the directional tone. Turning to the technical analysis, the 1-hour EUR USD chart indicates a potential buy signal if we see a decline followed by a false breakout at 1670, which could propel the euro toward 1709. A confirmed break and held above this level would open the door for further upside to 1.1749 with an extended target at 1775. At this mark, I would recommend going short on a rebound to capture a 20-25 pip intraday correction. Short positions at 1709 and 1749 should be considered on a false breakout. The 1.1670 mark would serve as the initial downside target. If the price breaks and fixes below this level, the euro could slide to 1630 and then extend weakness to 1585. At this level, it would be wise to go long on the rebound, aiming for a 35-40 pip move. Going long at 1630 and 1670 would only be relevant in the event of a false breakout. As for the British currency, it is currently trading in a sideways range. A false breakout at 1.3720 would present a buying opportunity, with sterling rising to 37.70. A decisive break above this level would pave the way for further gains to 1.3818, with potential to reach 3864. At this level, traders are recommended to go short on the rebound, targeting a 3540 pip move. Short positions at 3770 and 3818 should be considered after a false breakout. In case of subdued buying activity around 3720, it would be wise to shift long entry focus lower to 3678. Going long on a rebound would be prudent at 3636, again in anticipation of an intraday correction of 3540 pips. Wishing everyone profitable trades and a great weekend.